President Obama taking aim at the banks and the markets come crashing down. Goldman Sachs beating expectations. And today is a significant down day. Let's talk about why. Well, first talk about the drop. The Dow down a full 2%, almost that on the S&P. NASDAQ faring the best, just over 1% drop. The Russell's 1.8% drop. So, out of all of them, the NASDAQ faring the best, but the VIX, Volatility Index, 18% spike, putting us above 22. Gang, we were just at the 17-point level, and now we continue to rise, or we continue to drop. As of yesterday, we had a drop, but we were at support. I thought we would bounce back, but we didn't. We come crashing down, and let's blow this up. Look at this. We come down, down, down. My rising 50-day moving average. We do a touch and go and come right back up, finding support at that moving day average. The MACD, very important. We had this bearish divergence. It's starting to play itself out there in the markets. And we are sub-zero on the MACD. So the histogram, a big solid tick to the negative side. We're sub-zero and a big drop down. But the worth of this drop is only measured by volume. So I get a hint of what was going on in volume. I'm going to go to the spiders. This is the ETF. On the S&P 500, there's our drop today, finding support at the 50-day rising 50-day moving average. The volume, significant. A lot of people participating in this move to the upside. This is my 20-day moving average coming across. We were more than double that on today's participation to the downside. Do not ignore that. Let's take a look at the NASDAQ. Now the NASDAQ, we said fared the best. It was only down over 1% today, although significant in comparison to the other major indices. This one did the best, but nonetheless, we snapped major support. This support goes back over here in the fall of 2009 into the winter of 2009, and then today, January 21st, 2010, we come breaking down, breaking that support level. Significant. We made a lower low, kind of an even high maybe, but we broke below the 20-day moving average and major support. That does not bode well for the markets. Let's take a look at the Dow. And the Dow actually broke yesterday. You can see where it came right back up, but we were down below that. Actually, let me do this and put it on the bodies. Yeah, I would say that's fair. So it came back above the support line today, a decisive drop. So we open, we just come down, breaking through the 20-day moving average, and the Dow has now broken below the 50-day moving average. And you can see the volume, above average volume on that drop. So here I'm going to bring the MACD in. The MACD, big time sub-zero with a big tick to the negative side. And here is the Russells. The Russells, technically speaking, still looking the best. Although in a big rising wedge, which is bearish, we're still in the confines of the wedge. We do have a support area coming up down here around 622, 623 area, which would actually support. But if we break that and then get below this 50-day and 100-day moving average, that's going to show a lot of weakness in the markets. Here, we're just now showing a hint, going sub. Not quite, but we are right there in this neutral zone with a big negative tick to the downside. We start to see a drop take place. It could be a significant one, but let me tell you what I am thinking is going to happen tomorrow. I think we'll get a dead cat bounce. We will go up tomorrow, and perhaps we will also go up on Monday. Big question is will we get a trend reversal in the very near future? Now, trend reversal could play itself out to be a double top, for example. So if we take this chart, blow it up a little bit, this is the S&P daily. We come down, we rally up, hit our head, and start down again. We get this double top or a lower swing high type trend reversal, saying that we will start heading down. The question at that point would be how far? You get the very best of technical analysis here at freetradingvideos.com. We wish each and every one of you the very best in the markets. And a little tidbit for you. If you're long in this market, get your stop losses on because things can get hairy and fast. The idea is use a stop loss. Don't just exit your longs, because if the markets do go bullish, you still have a chance to make some money back that you might have lost the last couple of days in the markets. But you need to know how to short the markets. You need to know how to play bear or short inverse ETFs. You need to know these things, because if the markets do turn right now, it's not if they're going to turn, it's a matter of when they're going to turn. And if now is when, you need to know how to make money on the downside. You can make money 66% faster on the downside. You need to know those things. And if you don't know it and you are not making consistent profits in the markets, I highly encourage you to click on services, give us your information. It comes directly to both Matador and myself. We're the only one who sees your information. We will invite you to a Tuesday night Meet the Mentor call where you can learn about us, taking you in under our wing and showing you A to Z how to trade and how to do it properly, so you're not out there giving your money away to everyone else. All right, I'm done. Take care. Happy trading.